Alright, we're live. What's going on, man?
Nothing much, man.
Alright, I'll let you go ahead and introduce yourself. Give us, your name, what you do, maybe some credentials, how long you've been doing what you've been doing.
Okay.
Because I don't really know much, honestly.
Yeah, well, my name is Josh Bratcher. I run a company called Mobile Trading, and I'm a full-time day trader. So I founded Mobile Trading about four years, almost 5 years ago now. This come actually in August, it'll be 5 years. Crazy enough. So with the goal of teaching people how to trade, how to invest, how to learn to blaze their path to financial freedom and equip with the tools that are necessary, because there's a lot of stuff online and there's a lot of scams. And so I used a Discord, a chatting program, which I should have crumpled that next to the mic. Sorry, I'm not used to hearing myself and stuff, so I'm going to throw it off a little bit. But I used like a gaming platform called Discord to set that up for people to communicate and just for me to share my trades. And then I started creating content and everything around that as well, and just kind of slowly built that up. And also, this isn't really a thing you never stop learning. So over those years, people probably also seen me improve as a trader as well.
So how long have you been trading, like, in general?
So it'll be 12 years now.
So did you, like, go to school, or just like some hobby you started with and you were like, I'm good at this? Or
I dual major. I majored in. I have a few degrees, but biochemistry, biotechnology, and some minors. I looked at the lab and realized that, like, they don't make anything. I was like serving on like Topgolf, and I was like, I make more doing this than I would in the lab. So my options were get a PhD and like another 5 years of school, and I didn't want to do that. I was pretty done, or try to get into sales, make some real money there. But during like intermediate, when I was figuring out like how do I use like all this knowledge I've built to make money, and that's when it was like during that time period is when I got into the markets, and I started trading penny stocks, pharmaceutical companies, and like researching them and learning them and being like, oh, I understand this. That could be my edge. And so lots of people might not. So biotechnology is really new. There's not a lot of people. The program, even at the schools, that was brand new. It was during my last year, they built the new labs and they had the new courses set up and stuff. So it was like really new. CRISPR was not a household. I think a lot of people know about CRISPR technologies now, even if they don't have, some sort of specialty.
You'd be surprised.
Yeah. Well, I mean, yeah.
I think I just heard about it like maybe 2 years ago.
Okay, yeah.
And I kind of I'm into like the technology, science, all that kind of stuff. Like, I did a lot of podcasts, but I just heard about it. So I don't think a lot of people know about gene editing or like any kind of stuff like that. But
yeah, but it's really starting to hit the mainstream.
Yeah.
So during that time period, it's just like, these are publicly listed companies, and I know about them, and I know the technology is going to be huge. I know it's the future, and it's probably going to disrupt the entire pharmaceutical industry. So I just bought them up like crazy, And then 2020 came around, and a lot of those did massive returns. But I got lucky. I was just lucky. I was able to just recognize like this is just a giant bubble. It's not gonna last. So yeah.
So you kind of your specialty or the area you knew something about is what you chose to pick to like go into the market.
Yeah. Well, it's like the specialty was my intro, and then I diversified from there. So once I started learning about that, I was like, wow, this is actually penny stock picking is really hard. I don't even do it anymore. Yeah. So it was very coin flippy, but there were some like really big winners. And then it turned out to be like all the more serious companies that I had bought that did really well over the long term. I lucked out because by the time 2020 hit and like trading became the thing, I actually had already founded Mobile Trading, and then day trades like common and cool near me, like finishing up what I was for the launch, when I was like, I feel comfortable to teach this. I waited for years, and so on the tail end of that is when we launched, when the hype was starting to kind of die down.
Mm-hmm.
And, and it was just like, I launch and all I'm doing is just like pounding the table, like, this is a bubble. Everyone needs to watch out. And everyone's like, bro, anyone can make money doing this. And it was really hard to like differentiate. Be like, no, I've been doing this for years. Like, you guys just started.
Yeah.
And so like trying to separate myself from everyone, like so many other people had started companies. And I was like, well, I'm just kind of curse. Like, I'm just kind of fucked. Like, I just have to wait for them to blow themselves up and see who remains.
Mm-hmm.
I will remain, you know? So, yeah.
Because like you said, it was kind of like the fad for a long time. And I remember even, probably like 10 years ago, I had a buddy he was on the penny stock thing too.
Yeah.
And it might even be longer than that, maybe 15 years ago. And I think he bought a few, got lucky with a couple of them. So he's like, hey, you know, boom, boom. And it was like, I've always kind of been interested in stocks, but it's like I never like went out of my way to like do a ton of research, or like I know the very, very, very basics of stock trading, buy, sell, like that's it. I know, like, you know, there's options and all this stuff, but it's really like just kind of words coming in. I don't know exactly what that stuff means.
Right.
And I think a lot of people hear, you know, guys who know what they're talking about, and it's kind of what is it, where you get like kind of scared, hearing all the lingo, and I think they get pushed away. Like that one guy who commented on the post the other day, it was like, gamblers are better than day traders. It's like this common like thing pushes people away to make them think like, oh, I can't make any money in the stock market. Like, I'm not even going to try. I'm not even going to try to trade. So then I found you on Facebook, and you were making these posts, and I'm like, okay, this guy kind of seems like he knows what he's talking about. And I just kept following, you know, and you were posting your screenshots, you know, what you were doing, what people in your Discord were doing. And I'm like, all right, I'm gonna join this Discord and see what's going on. And I still have yet, I think I joined like 2 weeks ago, but I still have yet to make an account on like any trading platform or like putting any money. So I'm kind of here, like, we're doing this podcast, but I'm gonna use it as like something to kind of get me started too.
Okay.
And you know, hopefully some other people who watch this, because I have another buddy who's wanting to get into it. He actually messaged me and was like, hey, I'm thinking about doing stocks. I keep getting like my algorithms feeding me these guys, you know. And I'm like, so I sent him your thing. I'm like, hey, join this Discord. I'm going to join it too. Like, I'm telling you, we can probably make some money off this. So my question one would be like, is there a minimum amount of money that someone needs to like get into this?
It first depends on what your goal is, right? So like, because there's options, stocks, and then there's futures. So and the futures can also maybe be tied into a forex, you know. So that's like currency trading. So that's like really complex. I would say it's more difficult than options and stocks. So if you're just starting with stocks, you can start with any amount, you know. You can just like buy partial shares, and you can be a buy and hold investor. And there's a few people in the Discord like that, where they just want to know like what's in my investment account. Usually because I'm using very diverse strategies. I'm not right now. Actually, right now I'm really consolidated into like one stock.
I watch like when the Discord. I usually see a couple names. I think like SMH or like Nvidia. You pop up, or Tesla. There's a few names you like constantly throw out there that I see.
It's all about Tesla right now. Yeah. So, but that's. I mean, we can get to like the way why that is, because it's the first time I've ever done that, like going like really big in one stock. And I'm also doing a complex, not semi-complex option strategies to also control my risk with that. Because that's not, you need to meet a lot of parameters before you want to do something like that. So when you're just starting out with stocks, you start with any amount, slowly grow your account. You know, the key to, you know, having investing working isn't like just buy and forget. You need to like buy and buy and buy and buy. You know, keep you know, incrementally putting some money in, even if it's just like $5 a week. And lots of people say they can't afford it, but if you just start doing it and you force yourself to do it, you'd be surprised, like how you can make room for that. You know, so,
I mean, you buy a soda a day, or you know, I buy a lot. I'm trying to get off the energy drinks, but I buy like 3 a day. So it's like I spend like $9, $10, $11, $12 a day on energy drinks, and it's like, okay, I could be putting, you know, $5 a day into the market or something like that, you know. that's gonna. I've seen a lot of people say like $200 a month. Like I've seen the meme or whatever. Like if you're at 18, you put $200 a month in, it's X amount by the time you're whatever. Or if you start at 30 and you put $200 a month in, it's X amount at 55 or whatever.
Right.
So.
With when people are seriously struggling with having enough money to invest, though, I always like lean towards like really small amounts, really frequently, and just try to commit to like that weekly thing in a small amount, because it builds up faster than they realize, and then you don't have some sort of situation where something comes up and you got to sell out of that, because you want to make sure that you're putting so little in there that you just never have to worry about it. You never even think about it, because it never comes up like, oh, I just put too much in my account, something came up and now I can't afford it. Like, this is an emergency fund. This is separate from that.
Right.
This is the I never touch it again fund. So that's the way you want to
that's kind of, I wanted to put like a set amount in there, and then kind of, I don't know which way you grow it, or because I did the whole AMC GME thing when that was going down. I bought it like AMC. I came in on I would say the later end, but the stock was still like $18-19 a share when I got into it, and I bought like, I don't know, 400 or 500. I sold it like $55 a share.
Oh, great!
That's
fantastic. Must have lost money on that.
Yeah, it wasn't bad. And I was trying to get, so like, there's only ever been 2 times in my entire life where I was like telling people like, hey, buy this stock, like it's gonna do something. And AMC was one, and I don't know if you know who Dan Bilzerian is.
I know the name.
Yeah, he had Ignite. Okay. Well, he was going public. I had been following his like Snapchat for a while. Well, he was about to take Ignite public, and I was like, hey, like this is gonna be a pump and dump situation. Like it came out at 50 cents, and within a day it was like $1.50. And I was like, just buy it and immediately just sell it, because it's probably gonna be worthless after like a week. And yeah, sure enough, like 2 days later, 3 days later, it just started plummeting.
Okay.
It was like, there was only 2 times, it was one thing I'd been following, and I knew like he had just this cult like following, and as soon as he went public, I knew it was gonna like blow up, at least for a little while. And then the AMC, I worked with a guy, and he was like, hey, I don't know if you know about stocks, but like AMC things going on, and I'm like, okay, whatever, I'll just buy into it. And then he is still holding on to like, dude, $16,000 worth of AMC shares that he bought.
Oh, jeez.
Yeah, and I was like, dude, why didn't you sell, bro?
Yeah.
Like, I got the whole like, diamond hands memes or whatever that was going around, but it was like, dude, sometimes you gotta just, pull the rug and get out.
Right.
But so I've seen like Acorns. I was watching your video again. I watched it once already, but you mentioned like Acorns. Cash App is what I used the very first time I ever did trading.
That's awesome. Yeah.
And it was just easy.
Right.
It was just super easy. I've kind of been thinking about doing the Acorns thing, because I work, especially I feel like for guys like me, it's a good thing, because I constantly go to the gas station like when I'm at work, and like that whole roundup thing would be like huge.
Right.
And like you're saying, you won't realize. I like the idea of like $5 a week or whatever, because then people can look at it and go, oh wow, I've only been putting $5 a week in here, and I've gotten X amount of money. Maybe I should like, maybe I want to go to $10 a week, or if I'm doing this with 5, maybe I can go to 10, see what it does, or something like that.
Or even smaller increments.
Yeah, just anything.
Kind of like the gym,
Yes, compound effect, man.
Yeah, and also just like slowly building on it. Yeah, doing a little bit more. Yeah.
So, do you suggest I know like there's ETFs, index funds, and stuff like that.
Right.
I know you said something about like the Dow, which is like the boomer, boomer thing. Is there something like, if somebody wanted to play the safe option, is that like which way you would put them in? As like an index fund or something like that?
Look, if you don't want to, if someone would be watching us talk and they're like, I don't want to do that. I don't want to join the Discord. I don't want to get a financial advisor because most of them suck. And I would tell them, just buy the SPIA index. Top 500 companies within the U.S. They filter out, so if one of them drops below, another one rises, they get swapped out. They weight it regularly as well, so it's well-balanced portfolio. It can get a little wonky sometimes, but they do routinely rebalance those, because some companies will go up, have these crazy run-ups, and then they become too much of this index. But they do balancing. They keep all the best companies in there. You hold that over time, it goes up, and the the difficulty with something like that, and why most people end up going to financial advisors, is the SPIA index can have years where it's down 30%.
Oh, wow.
And you'll lose 30% of your money, you know? And so the thing is that over every 10-year period, it's up, you know? So if you have a long time horizon, you just keep buying, and if you don't want to pay attention, then don't pay attention. Literally just keep buying. So, and then, you know, when you get closer to retirement, you actually want to start taking some
Right.
money out, and then you kind of have to pay attention.
Mm-hmm.
So, so you can not get hit by one of those gears. But the thing with the financial advisor is they're not going to probably beat that performance, even with those dramatic years, downside years. And they're going to be charging you fees along the way. And just like you lose some of that compounding effect from that. And so it's, people think that what people like I do is a scam. And it's like, if I put on a suit and got an easy to pass license, that would suddenly make you think that you would give me money to not beat the market and,
Right.
and suck. Like, I'm charging you $20 a month. That's way less than them. $20 to just even see if it's worth it.
Right.
When you're going to give them 1% of your total assets, it's crazy.
Mm-hmm.
Crazy to think that. To think that what I do is the scam. So that's the way I look at it. And, you know, there are good financial advisors. The irony is that we are in my family's office. They own a brokerage. So he is a financial advisor. I'm the black sheep, but he's good. So,
Right.
you know, he doesn't manage the money, because most financial advisors let me know if I'm going on a tangent. This is going on too long, but most financial advisors manage the money and they get the clients. So what does that mean? They spend none of their time actually watching the market. They spend all their time trying to make more money, because most of their money is going to come from getting new clients. So they're the worst. And when I talk to them, they don't know anything that's going on. They haven't looked at the stocks that they're holding for their clients until they get sidelined by something, because they're not paying any attention, because they're just focused on getting new clients. That's the guy you don't want. So like what he does is he outsources that to someone who's full-time like me, just watching the market. And every once in a while he'll also even ask me, like, probably more frequently than once in a while, like, what do you think of this, or what do you think about this? Or I have a client asking about this. So you know, we're always trying to bounce ideas, you know, so within networks, you know, for professionals who are watching this all the time.
Yeah, I've felt the same. I have a few people who've gone to financial advisors, and like I understand the need. And like you said, it's just like any other profession in the world. There are some people who are genuinely good at
Right.
being a financial advisor. They care. They're doing the research like you're talking about. They're
Mm-hmm.
trying to perform better for their clients. But then you have the guys like you're saying, you know, they go past this easy test. They think, oh, I'm going to make a quick buck, or I'm going to make some money off
Right.
of these people, and they're just, you know, getting numbers in the door. And it's
Right.
like, oh, you may lose some money, you know, that's just the way the game goes, and that's kind of their mentality.
Well, they also don't sit down. The guys who are doing that, some of them are well-meaning people, you know, but some of the ones who are doing that don't even sit down with the clients and like, oh, this is the S&P benchmark that we should use. You know, so these people aren't even aware that there is a benchmark that they can use and say, oh, if my guy isn't beating this, then I'm paying him to do basically nothing.
Mm-hmm.
And it's like, when I tell people that, it like clicks on their head and they're like, oh crap, I'm paying for worse performance that I could do doing literally nothing, just buying the index and then forgetting about it.
Right.
You know? And so you gotta really be, there might be a peace of mind with, oh, there'll be less risk, but there's no guarantee of that either.
Exactly.
You know? So yeah, there's a lot of people who, the most common portfolio construction that financial advisors will use is 60% stocks and 40% bonds. And so like during COVID, it was an abnormal year. It was like the second time ever in history where stocks and bonds, like in 2022, both went down. So typically bonds go up and stocks go down, and those portfolios are protected. When the stocks are going down, the bonds are going up.
Mm-hmm.
Well, that correlation's been broken for several years. So that portfolio construction that's held up pretty well for like 40 years is suddenly not working. And people who are 50 years old are looking and like, oh, I guess I don't know anything. Because it's a completely new market environment. So, yeah.
So,
That's a lot.
Yeah.
Yeah.
I mean, it's important though, because like you said, it's kind of, with something like your finances, it's kind of like getting a contractor for a job and then like you just let them go do the job and you never check in. Like,
Yeah.
You don't, I'm using that reference because that's kind of the area that I work in. But it's like not understanding, at least at a baseline, what it's supposed to look like or, how it's supposed to function, and you're just trusting this guy to just take care of everything. And I don't know how you can be like that with your finances, especially when you're talking about like people who have lots of money and then just kind of just, all right, here you go, I'm gonna go check out now, and you just do whatever it is you do over here.
Right.
So like, yeah, it was a tangent, but I feel like it's important for people to know like that's not always the best answer. It's just putting the responsibility on somebody else without doing your due diligence on that guy. I know one buddy, the financial advisor he uses is recommended by like some kind, so I think he's like one of the better ones.
And I know a bunch of good ones.
Yeah.
So people who do that in our network that are in the Discord even. There are several broker-dealer owners, even hedge fund managers in the Discord who check in and share their ideas even as well. So what they like. So there are good ones out there. It's just like a great example would be there's something like, I don't know the exact numbers, so I'm not going to guess and that sounds stupid, but there's thousands of mutual funds in the market. The amount of mutual funds that are actually good and don't overcharge on fees is probably like a few dozen. That's the ratio of like people who are bad at the industry and people who are good at the industry. It's literally that extreme.
Mm-hmm.
So we're literally talking about a few percent that are really going to truly exceptionally be worth it for you. Yeah.
So you've been doing this for 12 years now. You got the Discord. You have a YouTube channel. What? I think we'll get to that in a little bit. I don't want to bring it up yet, but you've got some stuff in the works. What are you trying to get out of like the Discord and the YouTube? Are you just trying to help as many people as possible, or like what's your primary goal?
I want to make money. Yeah. I mean, just so there's no hiding behind. So like the goal is to I do want the purpose of a low barrier to entry. Mm-hmm. And for a long time it was free. It was like for the first several years I kept it completely free, and we weren't getting hardly any traction. There was no activity. There was no one to teach because there was no one participating. And I was like, well, this sucks. And then I was like, you know what? I'm doing all this work for nothing. Mm-hmm. Screw this. Pay me. Right. And then I'll do it. Right. It was a little bit different from the socials because I feel like people pay me in likes and follows, mm-hmm. and that's cool because then I feel like, okay, this is having an impact. I get the dopamine from it. I like that. Right. But for the Discord and sharing my trades and stuff, I was like, I'm doing this for free. I don't want to say anything, so it feels lame. And so then I started charging, and then actually it picked up. And actually, the thing I noticed that I'm still kind of resisting a little bit is the more I charge, the more people are interested. Is how the Discord is going. The more I charge, the more it grows. So I think people, just have the conception that if it's cheap, it sucks. And I had the idea that if it's free, everyone will come. Right. I can steal other people's business from the scammers and stuff. The scammers charge, a one-time. Who would pay a one-time? A one-time fee is ridiculous. I have a one-time fee, but only because I also offer monthlies, The idea there is like I perform consistently, so I can charge a monthly fee, and the lifetime is there. Honestly, the lifetime is there because the reality is that if you're with me for a few years, you're gonna know enough at that point that you can do it on your own. Right. Like that's the extent to which we teach this, and we've had people basically retire from the Discord for like they are successful traders on their own, so like they don't need to have that membership anymore. So, which is really cool because it's like I watched them grow all up. Right. Yeah. So,
it's pretty rewarding for sure. Yeah. I 100% I get what you're saying with like free versus it's like people take advantage of the fact that it's free, so they don't like try or like put any effort in. I remember seeing like the psychological study of like Payless Shoe Store. I don't know if you ever seen this video, but they went to like downtown New York, I think, or like Washington D.C., something like that, and they made this like bougie looking store, marked all the prices up on the shoes, but they were all Payless shoes, and people were like coming in there and saying, oh, these are the greatest shoes ever, and they were paying like 10x times for the same shoe because they thought it was more valuable.
Yeah.
So it's like, I guess the same as some psychological concept of like, even I think I might have joined the Discord when it was free. I don't know. But like when it went to paid, I was like, okay. I was like, I feel like I need to get in. When you were like, I need to donate, because it seemed like it was more of a, I better get on this now. Like it's becoming a paid thing. Okay, it feels like it's becoming something, which it probably was something the entire time. But it's like that psychological thing of like, oh, I don't want to miss out. They're just charging for this now. I got to get in here.
Yeah. There is an extent, like I know what I'm doing in the market, but for like content creation and forming the Discord and how to share all this stuff, and like right now we have a bunch of projects that are like running all at once, and so I have like a team like helping me with those, and so like, but for the most part, like all of that's new, and that's kind of like me piddling around and making mistakes. You know, like the ideas when it comes to the market are good, but for like how to construct the Discord in a way that's easy for new users, how to make that process, because a lot of stuff, I think our oldest member right now is 68. So, you know, getting things set up in a way where it was easy for him to learn, you know, that's not easy to do.
Right.
You know, so, and then we have all these young kids that are like, why is this set up in this, obvious way? Like, you know, like 3 signs that say open door, you know, like pull to open. It's like, isn't that kind of redundant? And I'm like, well, yeah. I'm trying to think of all kinds of people who are coming here. Yeah.
Make it foolproof.
Yeah.
Do you have a lot of like super young people? Like,
there's a good amount. Yeah. It's a bunch of hustlers.
Yeah.
Everyone in there is a hustler. Almost everyone in there is doing a few different things. Even the members of, I've labeled the inner circle members. I don't know if that sounds too pretentious, but I don't know what to call it besides that. So I was just like, whatever, I'll just leave it like that. But there are members who don't pay because they help me run the Discord. So there's technically me and 2 other traders who pretty much trade full time. Then we have a level 3 CFA who is anonymous because he still works in the industry. And then we also have Monty who does we used to do a podcast and it just became too much with everything else we're doing. So now we just do it with just the 2 of us. We'll sometimes do a YouTube video, but he was an analyst for multiple hedge funds, and now he does independent work. So I've kind of helped him build that up and build his Substack, and so I also rep a lot of his stuff as well. So it's the 5 of us that are all sharing stuff in there as well. I think I lost track of where the point of that was going to go.
We're talking about the younger people and the hustlers.
Oh yeah, so even those guys are doing all these side hustles as well. So for the young kids, a lot of them, we had one member. I think he was 15, and so he was actually technically too young to be in the Discord, but I didn't find that out until after he graduated. But he was like running like several YouTube channels using JRE clips and making YouTube shorts, and he ended up getting to the point where he was making about like $1,700 a month off that, and then he started doing multiple channels, and then he figured out how to automate the process, and then he was doing complex option selling strategies that he learned from Abraham, who's one of the Inner Circle members. So he was more attracted to that strategy. It's different than mine. And this like super young kid, we didn't really realize how young he was, but he was also just an exceptional person, and ended up learning more about him, which I will keep those details to myself. Right. You know, I don't want to dox him, but he's an exceptional kid. Like this, just like summa cum laude or whatever, in school. Yeah. You know, he's going to be the top in the class. Yeah. So, he did really well. But there's a few people like that where they come in, they join, and they're just brilliant people. They pick everything up really fast. A lot faster than I did. Right. Yeah.
I think that the younger generation kind of has an advantage, especially with the internet and all that stuff.
In time.
But, yeah, exactly, time too. That's why I was curious, like, how many young people you have, because it seems like you said, the Dow is like an old person. Stocks kind of seems like an old person kind of thing. So it's like, and it's not a fad poppy thing anymore. So I'm curious, like how many young people were like, oh, I'm gonna get into trading stocks or like
Right.
selling stocks, because it doesn't seem like the in thing or the it thing. The whole YouTube thing, that makes sense. Like, super props to him for, you know, learning all that and like being able to do that at that young.
Right.
But
The ironic thing is that I've noticed there's like two archetypes. So there's the hustlers who are trying to get rich fast that will find their way to stock markets, and then they immediately gravitate usually to futures or options. And then you have the really conservative, like risk off guys who are big savers, and then they find stocks because they're just trying to get bigger interest returns and protect, you know, build their nest egg.
Mm-hmm.
Like those, and they're very different. Like the conservative guys do not want to trade. They think trading's a scam. They'll be in my comments saying, you know, gambling is more successful than trading,
Right.
which is ridiculous. But
Yeah.
and there'll also be the super aggressive, like I need to get rich tomorrow guys who are just like go 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 go, and they run 1,000,000 miles an hour. And for those guys, the worst thing that can happen for them is they actually succeed early on.
yeah, that's kind of the. I'm like in the middle ground, because I'm not really. I got 3 kids, another one on the way, so it's like I don't have the time to be playing like the super long game, and I also am like kind of impulsive, and I'm trying to tame and make that impulsive, like smart impulsive decisions,
Yeah.
but I'm not risk adverse. Like, I'm willing to take chances because I feel like that's how you get, like, that's truly how you're going to get ahead.
Right.
Not by playing like the safe game, especially like at my age. And you don't have a ton of other options. So it's like, for me, I'm not trying to get rich quick, but it's like how to throw something into the market, you know, maybe, I don't want to say day trade, but yeah, essentially, because like when AMC came out, that's what I was doing. That's like what I like to do. Oh, this is up $2. Okay, well, I bought it at whatever. I'll just sell them, and then, you know, maybe it'll dip back down. I can rebuy them, and then just wait, and maybe it'll go back up, and I just resell it again.
Right.
Like, even I watched AMC after I sold it, and I'm like, dude, I could have made so much money just buying and reselling the stock, because it would fluctuate so much
Right.
from the whole time. So it was like, that idea to me is probably what I like, but I don't know a ton about, you know, the options and all that other stuff. I've heard people say it, so it's like, I don't know other ways. I've always just heard of, like, you know, buy and sell.
Right.
Buy low, sell high, you know.
Well, the thing with stocks, so usually what you gravitate, there's a million different ways to make money in the market, first of all. And on top of that, there's so many different strategies. So, like, you know, just as my time in the game, I know a lot of different ones, but there is very obviously a few that I have specialized in that work for me, and not really deviate from them because they work for me.
Mm-hmm.
You know, I've taken a long time to get them to work. So, you know, a lot of that comes down to your personality type. So, some people can't handle the risk of options. If you make a mistake on a stock trade, you're going to take a hit. It's going to suck. If you make a mistake on an options trade, you can literally just lose everything. So, and it can happen in minutes. So that's like, can be a heavy hit for some people that can't handle that type of risk. And the same with futures. Futures is the only thing that where if you make a mistake on futures, you'll lose money that you didn't even put in. So, you know, you can blow up your entire account pretty fast. Yeah. So
Yeah, that sounds very risky.
yeah. So you can start to figure out of, like, you could try them and give them a go and see, okay, do I like this? Do I understand this? Is this working for me? And that trial and error is really going to how you figure it out. Because when people think about day trading, they usually think of, like, I'm in and out of position in one day. But, like, that's only part of what I do. You know, some of my trades are options trades that take a whole year to play out, you know. Some of them take a month to play out. Other ones, you know.
So are you planning, okay, so you're saying like some take a year, some take a month. When you go into the options, are you like, do you have the foresight to know, like, this is gonna pay off a year from now, like, because you've looked into something or seen something?
Yeah. So like for Tesla, for example, we have in October we have the Robo Taxi release that might get delayed. So it could get delayed to like early 2025. So that's the big catalyst you want to keep in mind, right? And then the self-driving should probably come around the same time. With the way the development of the AI is and all the updates of the beta of the full self-driving, the FSD, that's come out for the Teslas, it should be around that time. So that's a huge catalyst for the stock, because the stock is priced as just an electric vehicle company. But if Tesla's the first company to solve self-driving, everyone's probably going to want to use that technology and probably pay Tesla for it. Tesla could probably also raise the prices of it, because it's a subscription package offered through the vehicles. So it's not just included with every car. So that's an extra revenue source for them, on top of the robo-taxis. So Uber will probably want a partnership, pay them for that, to use that. So there's all this extra revenue that suddenly comes in. So that's a catalyst that can cause the stock price to go up. So if I set an options trade, I'm like, oh, I better capture that catalyst. Okay, what else is going on with the company though? So then we can look and we see, okay, we have estimates that the Optimus robots will be in development in 2025, late 2025. Okay, and so them working inside the company is cool, but it's not really that. It might give the stock a boost, but not a ton. What you want to see is commercializations. You want to see Tesla sell these robots to other companies. Okay, the development path for that looks like it's going to be in late 2025, maybe early 2026. So now we have like a full thesis where we say, okay, pretty much regardless of what's going on in the greater market or within the economy, Tesla's got enough cash right now that they can enact all these ideas, and already the stock is really cheap because they're not doing very well. We have these huge things coming up, and it's cheaper relative to the other big tech stocks. And everyone just thinks they're an EV company, but these things are all about software and robotics. They have nothing to do with the cars. So you can take those catalysts, and then we can project that time frame, and then I can purchase options that expire at the end of 2026.
Okay, so when you purchase an option in that, so you're expecting Tesla to go up, right?
Right.
So if you buy an option, is it a call? Is that what you're doing? If it goes up?
You're
okay,
right.
So if you buy the option, the call, is that how you say it?
Yep.
So how does that work? Are you like paying the price now for the share, and then it's?
So you're paying the price, the contract price. Like if you were at if you're at an Airbnb, let's say you were there for a week, and then you're like, oh, I gotta leave on like the second day. If you tried to flip it, like, hey, you could stay at this Airbnb for the rest of the 5 days I got it for, just give me some money. And they're gonna give you the same amount that you paid for, because there's only 5 days left and you pay for 7, they're gonna give you slightly less, right? So that's kind of what has to get priced in the option contracts. That's just one of the things, okay? The other thing that might change is like if there's a concert going on. So if there was like a concert on the second day you were there, and then the third day, no one really wants to be in the area, it's not as desired, then it's also, you're gonna get less money, right? So the same thing happens with an option contract. So if the market anticipates a big move, you're gonna pay an extra premium for it. If the market kind of sees what you're seeing, you have to be aware that it might already have priced in what you think could happen. Yeah. So that's why it's also important to kind of like keep an eye on the pricings of these contracts, because they're different than the stock market. So one of these contracts controls 100 shares. So the options can be used within a stock portfolio as a way to manage your stocks. This is what a lot of people also don't understand, because they're scared of options. They think of them just as trading vehicles. But actually, the way most people use options has nothing to do with trade. What I do is actually a minority of what most option contracts are being utilized for. So they're usually being utilized as accessories within a stock portfolio, as a way to manage your risk, or as a way to manage risk within the markets. So there's a few other things there, but it just gets more complex. But the idea is that I can buy one option contract, and I can have the choice to seize 100 shares if I want. So I can buy them at whatever price I bought the option for, but I can spend a fraction of the money it would cost to buy all 100 shares. So I have the option to buy them.
So you do the contract, but you don't have to purchase them until said time?
Yep.
Okay.
And you don't have to purchase them at all if you don't want to.
Okay, and then when you is it exercise the option? Is that when you like sign up for it? Is that?
If you exercise it, it means you're going to assign yourself the shares.
Okay.
If you exercise a call, because
Okay.
it's different if you exercise a put. It's going to be.
Okay.
Yeah.
So basically, what I'm trying to say is,
When
when you get the contract, and then it's locked in at whatever price when you purchase the contract.
it adjusts.
Okay, it does adjust.
It does adjust.
Okay.
Yeah. So that's how you're making money.
Okay.
Because, when I first bought Tesla, it was around like 140. Now, and those contracts were like, I think they were like $300. Oh no, that would have been the end of year contracts. No, when I bought my 2026 contracts, they were like $1,500, I think, $1,500
For one contract.
for one contract.
So you get 100 shares for $1,500.
Right.
Okay.
Oh, well, you are paying $1,500 for the contract that allows you to purchase
Up to.
100 shares
Okay.
for the strike of the contract.
Okay.
So once I purchase a contract, I'm agreeing what I'm going to pay for the shares when I buy it,
Okay.
and that's called the strike.
Okay.
Right. So, and that was a $400 strike. So I am giving myself the option to purchase these shares at $400, and depending on where the stock is at that point, I may execute it. I probably won't. I'll probably just take the money. But I think right now those contracts are worth about probably like $2,400 or something. The stock sits at like $220 right now.
Okay.
And so they're doing their cooking. So they're looking really good. So, and there's different, we call them Greeks, but there's different like variables built into those contracts that also allow you to calculate like what it will be when the stock is at such price.
Okay.
Yeah. So there's different things that we can also use to anticipate what it will be as well.
Okay. So when you say the strike, so that's when it comes into play when you're talking about like the taxi and the robots and all that. So you're anticipating, okay, I'm going to pay $400 for it, but you think it's going to go higher than that. That's why you're agreeing to pay $400.
Right. Well, I don't even need it to. And by the way, I keep itching myself. I have a bunch of poison ivy from doing yard work.
Oh, nice.
So I don't know like, is he sketching out? No, I keep forgetting not to scratch it. But so I don't really even need it to go over 400. It takes so long for those contracts to expire that I just need, like, I could sell them now for profit, right? There's nothing that says that I have to continue to hold these. I could drop them right now, just take the money and just look for another play or see if the stock wants to dip, it can buy them back for the cheaper price. So, it all depends on like what you see. Is my thesis still alive? Does the catalyst still look okay? Does something change fundamentally? Is the market, But obviously the market's starting to realize since the stock's gone from, stock's up $60 right now. It was up even more. It was up over, I think, $140.
Oh, wow.
Yeah, so it would have been $120, $23 at one point. So like the market started to realize like, oh, we've severely mispriced something, And part of that is
This seems like the same. The market, like you're like analysts, I guess, are who fluctuates the price on the actual like stock exchange, or because it kind of sounds like gambling, like in the same terms of like you have I watch UFC, so like I watch the betting lines, so it's like there may be at the beginning they have a betting line for this guy is negative and this guy's positive, but as you move closer to the fight, more footage comes out or maybe something comes out and then it swings, it changes. So is it like the market? It's basically just correcting
basically
from new information.
Yeah. Well, I mean, basically, because that's the goal of markets, right? A lot of people just like they have the idea of a stock market just like arbitrarily in their head as just like some finance bro, lame stuff, boring stuff. Who cares? But the markets is an amazing tool that we can use for the whole world. We have the impossible problem of trying to decide what the price of all things should be at all times. Mm-hmm. Who's going to figure that out? Right. No one. So the only way to really figure it out is to have everyone trying to do it at all times. And if everyone's just trying to figure out the price of all things at all times, maybe we'll get it right. And we still don't. So that's why it's constantly changing. So like that's what stock markets are meant to solve. Like it has a real utility in the world, you know? So, and the market tells you like what's important. Like if copper prices are going up, copper is important. If the price of water is going up, there's water shortages, water is important. You can pretty much track everything going on in society if you learn to read the market and pay attention to what's going on. It will tell you like what it cares about. It's telling you who it thinks is going to win the election even. So you can learn to pay attention to those things if you learn to read the market.
Okay.
Yeah.
Yeah, see, when I see now that I'm talking to you about it, like it's like kind of starting to make sense. I looked at it like you're saying, like I never really understood. I'm like, how are they coming up? I don't understand the fluctuation of like what's going on. It just seems like numbers are just constantly changing, and it's like you don't even know what's happening. So it's even for me, it's been, I don't know if I want to get into that because it's like I don't understand how it works. And I feel like a lot of people are in the same boat. So it's like, it's very nice to have someone who actually knows what they're talking about and can explain it in a way, like the whole thing with like, you know, I pay attention to gambling or whatever. So it's like some of those same systems kind of co-align of how, you know, the market analysis anyways works of like, oh, okay, we found something, Tesla's going to do whatever, it should go up. Or, you know, so-and-so said something, now their market's going to go down.
Right.
So I guess once you understand, it's kind of like, I guess, pieces of a puzzle. And I guess the more pieces you can bring into there, the better picture you have of the market.
Well, there's also been the huge social aspect of it because everyone's playing this game. And if you've been, you know, think of high school. When there was a trend that was cool, everyone was doing it. And then a few years later, you realize it was stupid. You know, that's what COVID was in the markets. Everyone was buying a few of these stocks, and they're like, "These are the things to buy." And then a few years later, we're like, "That was way overpriced and stupid." You know, like markets go through these social trends, just like because it's all run by humans, and we do these social trends. We start to fall into this group thing. So, like, if you want to be a good trader, your job is to constantly challenge every preconceived notion. If someone tells you something and they say, "Oh, that's just obvious, everyone knows that." Oh, that's a warning sign. Oh, I better dig into that. Does everyone know that? Are you sure about that? Tesla's just an EV company, everyone knows that. Really though? I better dig. You know, so that's where you find your opportunities. And anything where everyone's saying like, "Oh, it's obvious because blah blah blah." Is it? Did you actually look into it? Or did you hear that from someone who heard it from someone who heard it from someone who heard it from someone? And it's been said so many times that everyone just accepts it, you know? Because that's what happens in markets. And especially when most of the money is just passive and people aren't paying attention. So like the people who don't want to do what I do, who are just like, I just want to throw money in there and not look at it, they actually make it easier for me to do what I do. Because when people aren't paying attention, they aren't playing the game of making sure things are accurately priced. And when things aren't accurately priced, that's when I have my opportunities.
Okay.
That's where my opportunities appear.
So it's like that little thing that's like, oh, kind of like you're saying a trend where you would always hear like, if you're hearing about it or you're seeing it, like it's too late. Like you've already waited too long. Because now. And
in fact, if you're hearing about it, it might be time to do the opposite.
Okay.
Because the hive mind is formed.
Yes. Okay.
Yeah.
Okay.
Yeah.
That makes sense.
Right.
Yeah, dude, this is good stuff. Okay, so the one thing I want to talk about, I don't know if you want to talk about it or not.
What do you want to talk about?
What you got in the Discord going on, or your beta testing?
Yeah, so we're working on. So I developed a trading bot based off of my technicals, which I'm not gonna disclose those, but it's been working. And it's so funny because one of my really good friends who's been a member of the Discord since like pretty much day one of my best friends, he called me the other day and he was like, "I thought didn't you say that it's impossible to make a copy-paste strategy? And here you are, suddenly years later, talking about how you made a copy-paste strategy." And I was like, well, I guess I don't know, learned. It's working. So it's been working for a few months. So it doesn't trade Austin at all. It's a very, very like specific setup that it requires, but it has been working. So I'm like, okay, I'll roll out a beta, put it in the Discord, and just have it send those stocks. And so I can automate that, because right now I have to manually go in and look at it and see what it's pulled up and see what it likes. So that's annoying, sucks. But I want to automate it so it's just in the Discord, so I can do what everyone else is going to do, is just look at the Discord and see what it pulled up. So there's a few other things. So like I use TradingView for when I'm doing my market analysis, and I want to automate that. So whenever I set an alert in there, it automatically sends it to the Discord. I don't have to do anything. Or making another bot that automatically updates every trade I make within seconds. Because right now I make a trade, I type it out,
right.
and a lot of times, like, especially if I'm am day trading, where I'm in and out in a few minutes, I share it and it's already up 30%. And I'm like, well, there's a few times where it's like, I take it, I'm about to type it, I'm about to hit send, and I look at the price of it, and I'm like, well, it's already up 50%, so I'm not going to share it. And I just delete it, and then everyone's like, didn't take a lot of trades today, even though the market looked really active, and it's like, well, I can only be so fast. Things happen so fast sometimes. Which I'd say is definitely on the rare side, but if we have this automation feature, I think that might make things more interesting. So, and a lot of that stuff isn't, it's not easy to do. I'm not a coder, so I've hired help to do that. So, and then apply to be like a third-party developer with Charles Schwab, so I can get access to market data as well as paying for other access to data. The amount of subscriptions I'm paying for and the amount of money I'm spending on them, like I don't even know at this point. I can tell you for sure, like the subscriptions I get from the Discord aren't enough to pay for it.
Right.
So that's like why I charge for the Discord. It's like, hey, if I could break even on a lot of this stuff, that'd be sweet.
Right.
Yeah. So, and even make some money off of it, great. One of my mentors back in the day, who really took my trading to the next level. That's why I learned to be fearless and like thinking bets. I helped him create his own Discord. So after we traded alongside for probably like 14 months, like a little over a year, and then I started my own stuff. So I was like, I want to break ways. Like, hey, I've got this now. And then I helped him also create his own Discord at the same time. But he had a much bigger following than me. He also has a lot different style that he has, charges a lot more than I do as well, because he has a bigger following. He's making like a lot. I shouldn't say how much. Right. A lot, like a whole lot.
Yeah, subscription model is the way to go. I try to tell people, like, imagine we're just in the U.S. and there's like 330 million people, give or take.
Right.
Worldwide, if you can hit imagine $1. You charge a subscription. You get 1 million people. That's a lot of money.
Right.
Like, that's a lot of money. Subscription is definitely where it's at. And I mean, as long as you're bringing value to like $20 is literally nothing. Like, for what you're offering, it is literally nothing.
Right. And we're pretty much already doing what we're doing all day. People might see it as work, that I'm typing everything out. But honestly, this also is what I would do anyways.
Right.
I would be typing this all out for myself. I'd be logging on my trades myself. Like, I used to have an Excel spreadsheet to keep track of it. I actually have in the Discord, people can download the old one I used to use. And now I just use the Discord as my log. It has all the trades in there.
Do you think, okay, so as you talk about like writing stuff down and like logging everything and like how you into the research, I feel like that's where like college comes into play, like because you got that experience of like
working in the lab.
well, like doing the research for papers or like so you kind of like had this, I don't know, I want to say like a pathway that you can kind of like, did it help you in trading, like going to school and like having this discipline to actually do the research and because I feel like that's where a lot of people don't have maybe the time, I guess. And again, that's where the Discord comes in, because you're doing the work and they don't have to, if they don't want to, they don't have to go down that whole road, because that's kind of what you're doing. But if you're interested in a company, you're kind of showing them, hey, this is what I do. You can replicate that and go do it for whatever company you like, or whatever niche. Or
we do need to do like a full like framework for how to do breakdown research. Monty and I, he's our analyst. We're going to do something like that in the future. You know, I've done a few webinars and stuff for free. I try to teach people, and I was actually thinking about going to the local college and renting out a classroom.
Yes, in your Facebook post.
Yeah. So maybe later this year. But there is some of that where like my school, my background helped me learn, but it's probably equal parts with mistakes. And like, you know, you lose a bunch of money and you learn that lesson pretty fast.
Yeah.
You know,
Yeah.
like I missed that. Shoot. You know?
Yeah,
Except it's not shoot, it's like throw your phone mad. You know,
Right.
so I don't get that emotional anymore. But I tend to not make such horrific mistakes anymore because I already made them all.
Right.
You know, so it's probably equal parts of that. Schooling did help because I did learn the basis, especially when you're specializing in something like medical research. I mean, we all saw 2020. You know, people are sharing all these medical articles, and it's like great. You can't just there's an extra layer here that no one's hitting. Like even people who claim to be, you know, like, well, I have some experience, I'm a nurse. It's like, yeah, but it's not just what did the research say, but it's also like how good was the research, because not all quality of research is equal. So everyone's sharing the results of every study and acting like all the studies are equal. It's like, I don't know, like you don't have you have maybe you know, you're literate, so you can read what the title says, but you don't have the depth of knowledge to understand like what separates all these studies, what is more legitimate, what has been more thorough. You know, did they have a third party checking everything? So like, it's stuff like that and details like that you miss until you've been doing it for a while and you've made some mistakes and, you know, said some dumb things and looked like an idiot maybe. Right. So yeah.
Okay, so let's see if I want to. I know we talked about Acorns. We talked about Webull. You talked about Cash App. I went to like Charles Schwab before to open an investment account. I didn't really do anything with it. But would you recommend one way over another? Let's say for somebody who wants to be more active, what would you recommend?
But they would probably want to go through. So what we all use in the Discord for the inner circle members, that is either Webull or we use Charles Schwab.
Okay.
If you use Charles Schwab and you want to be a day trader like me, Thinkorswim is my favorite platform. It's the one I'm the most comfortable with. The one that's probably the fastest growing is called Tasty Trades or Tasty Works. I think Tasty Works is a food company and I'm getting them mixed up. I don't use it, but Abraham doesn't see this, he's gonna make fun of me. But I think it's Tasty Trades. The guys who started that company are the ones who wrote the code for Thinkorswim years ago, and they kind of improved on it, and they've made like a better version for Tasty Trades.
So what exactly is that?
It's a platform that people use to get basically the data necessary to be a trader.
Okay.
So it's going to pull up the charts for you. It's going to pull up the option contracts, what they're worth. It's going to also provide some basic tools. So maybe like a quick snippet of what the company does, and maybe a few analyst reports and some news and stuff. So that's actually like your platform. So once people get that, they'll start to learn. Then they'll download that program, they'll open it up, and that's the next part where they get overwhelmed because they're like, "Oh, there's so many things on this platform. What the heck am I looking at?" You know, and it's just like you'll learn it. All right, you know. So
so to do this, you're like 100% want to get like one of those.
you're gonna need one of those.
Yeah, you're gonna need one of those.
Yeah, Charles Schwab offers like Street Smart or something. It's their go-to, but it sucks. It's like the worst thing ever. But they merged with TD Ameritrade, so they also took over the Thinkorswim platform. Okay. So Thinkorswim's really good. I know Tasty Trades is probably better, but I've been using Thinkorswim for so long that like I know what I'm doing. I know how to navigate it, and I'm just comfortable with it. So it's kind of like video editing software. You learn one company, and you know, then something else comes out, and you're like, well, I don't know all the buttons or the hotkeys and stuff, so I just don't really want to mess with it.
So if you're new, like completely new to this, probably the best thing to do would be like jump on YouTube and maybe watch some tutorial videos on those platforms or something.
Yes, I don't have any, unfortunately, for specific brokers. I don't know, maybe we should make some, but you should be able to find some. I'm sure there's some out there, because that's like the easiest thing to break down for new people, is just like how to navigate through it. So they'll probably, there's definitely going to be some YouTube videos, and maybe I can actually like just put together a few of those.
Some content, man.
Yeah. I don't get excited to make stuff like that.
Yeah,
you know?
I know.
So,
Yeah, it's work.
like,
that's the work.
The
stuff.
only way I enjoy teaching is through the webinars, which is why I did the webinars to make the YouTube content. Because otherwise, I'm just bored.
Yeah.
That's not what it is.
I do the solo podcasts and they're fine, you know, but it's just so much better when you have like interaction with somebody, like bounce, you know, idea. It makes you like think of more stuff. So like
right.
in the webinars, you got somebody asking a question, you're like, oh, I wasn't even going to talk about that, but yeah, let's go ahead and bring it up.
Right.
Yeah, I mean, webinars.
They also, well, the good thing is, like, when I started doing webinars, people were like, I don't get it, explain it a different way. I don't get it, explain it a different way.
Mm-hmm.
And then it's like, I didn't get better at actually teaching stuff because people are pushing me to,
right.
like, you know, like, that still doesn't make sense. And I'm like,
Right.
ow. You know, just, you know, trying to roll the dice until my brain comes up with something,
Mm-hmm.
you know?
Yeah, I mean, that is, especially when you're like using all this lingo and stuff, like you were breaking down the Airbnb thing and the other thing, it makes it easier for people who aren't, you know, so versed in the industry
Right.
to conceptualize exactly what you're talking about and how it works. So I think that's like super important.
Right. My big goal of what I do, because there is, once you start making this journey into this industry and you want to learn more about trading, there's going to be the noobs who are on like Wall Street Bet subreddit.
Yeah, I've been on that for a long time.
And they, they operate like a, pretty much anyone can kind of understand what they're saying generally. And then you're going to, then it's like from there, like when I started doing this, it was like from there to like some guy with like a few hundred followers on YouTube who's got his level 3 CFA and all his certifications, and he's talking at such a high level that it would take you like an hour to process what he said in like 10 minutes.
Right.
Because he's just like not dumbing anything down, not explaining anything, making weird references and innuendos to stuff that happened a year ago that you don't know about because you're not paying attention. So like I can understand what that guy's saying, and I could also look at all these guys and be like, wow, they're missing so much on the subreddit. I was like, where are the people to bridge this? Yeah.
LA5 it for me, please.
Yeah.
Yeah, that's what most people need, I think, like really, especially if they're not into it. Because yeah, like you said, it's so hard when you're talking to someone who is a literal expert in no matter whatever field it is. Like even when I listen to podcasts and I listen to like, you know, I'm interested in quantum physics and stuff like that, but you listen to these guys talk and some of them are just so technical. It's like, okay, dude, I can only...
Right.
I'm interested in it, but you're just going into a level where it's like I can't even understand what you're talking about.
Right.
Or like Andrew Huberman, for example, I can only listen to so much of his podcasts about like health and all this stuff, and it's like it's just so data driven and so like scientific, and it's like okay, I can only do like one of these every once in a while because it's just so much information getting dumped on your head.
This is one of my favorite podcasts.
Andrew Huberman.
I love
He's
Huberman.
the best.
Yeah,
he's the best.
he
I
truly
love him
is.
and Lex Friedman. That's some of my favorite podcasts too. But so get your account, get the platform.
Right.
What's the step after that?
You're gonna need to
Put some cash in.
Put some cash in. Yeah, that's a good step. But you're also, if you want to do options trading, you'll have to apply for it.
Okay.
So that involves like going through. Well, it's gonna. I already ask you some questions, personal questions about your basic information, and then if you want to do options, you're gonna need to apply for it. And there's different levels of options. So like you mentioned that Facebook post earlier, and it was such a classic comment that I see on my socials all the time. I used to fight against the comparison of trading to gambling because it's a deception that they are closely related because they're so different. But the difference between the biggest difference is that we were talking about buying a bet, like that option contract. It's basically a bet that's going to go to this price or at least go up, That's what a call is. But you don't have to just buy bets. So, because you can sell the bets, and that's the sell side options. So that's a higher tier, because on paper it should be a greater risk, but the reality is that most bets expire worthless because most people lose. So that's what Abraham does. He's one of our inner circle members. It's not what he only does, but majority of the time he's selling bets, not buying bets. He doesn't like my style.
Yeah, I watched a little bit of
So
you guys talking about your style, and he came on and talked about his.
Yeah, exactly. So he's completely different. So his style is all about I play the odds in my favor, and I don't really overthink any of my positions because most of them are going to work out, and I take lots of positions because of that. I just need to get enough exposure in different areas, and I'll usually come out ahead. That's basically the gist of his strategy. So, and there's some timing and some other things that go into it, but that's the gist. So, there's no comparison to that with gambling, because you can't be the house.
Right.
You're always the gambler.
Right.
But the way he plays, he's the house. So the odds are in his favor. The only thing is that style requires a lot of capital. So if you came to me and you're like, I want to start trading like that, I would say, okay, you need at least $10,000. Because they're gonna want that amount of money in your account because you're selling the bets, and so if you sell someone a bet and their bet hits, you owe them money.
Okay.
Yeah, it's just that most bets won't work, so you got to be able to sell a lot of bets.
Okay.
And let the odds play out. Yeah.
That's interesting. Man, it's so crazy, all the different ways. Like you said, there's a million different ways, and then people don't know. Like I said, the only thing I ever really knew about was buy, sell. I didn't know about options, shorting. I just learned about shorting when the whole AMC thing went down.
Right.
And then Tesla was a constant. People were trying to short Tesla. I remember that whole thing. Do you ever short anything, or are you?
I'll short with puts.
Okay.
So short in a few different ways. So you could sell a call on something. So you'll sell the bet and just collect the money for the bet. If I own a bunch of Tesla stock, but I don't think it's going anywhere, and I want to make money off of it while it's doing nothing, I'll sell calls against it. If the stock blows up on me and I have to pay out this ridiculous bet, I can just sell off 100 shares instead of paying out the bet. And just here's the shares that's equivalent to what you paid for. Mm-hmm. You want the shares at that price? There you go. Yeah. Rather than paying out the ridiculous amount of some option contract, because and all I did was just lessen my position, so to save myself some money. But the idea would be that most of these calls are expire worthless, and while my stock isn't doing anything, I can still get some passive income. So that's technically a short, because you're betting the stock won't go up, mm-hmm. right? But it can also go flat. You're fine. Right. You'll make money. So the other way is to buy a put, which is a bet that the stock will go down. So, and so puts are just the same thing as a call, but leverage to the downside. So
do you have to, when you do a put or a call, are you having to specify a number?
Right, the strike.
Okay.
That's your
your
strike.
Okay.
Right.
So when you short something, you have to say, I think it's going to go down $10 a share or whatever.
Where you're betting. Yeah, basically it depends on what's. So let's say the stock's at $100 and you buy an $80 put. Okay. But the $80 put expires in a month. Okay. If you buy that $80 put and the stock goes down $2 the next day. Mm-hmm. Okay. So there's still plenty of time left on the contract, but since it moves so much so fast. So it moved if it did 10% of the move in one day, the contract's going to shoot up. So you do have the opportunity to right there and be like, wow, it already moved that much. Okay, I guess I'll just take some of the profits there. Or you could say, oh, I'll probably move a lot more and I'll just keep holding it. And maybe it goes all the way. Okay, so you can make money all the way down to whatever you're. Okay. You could also have a scenario where it goes down $2 on the first day. You're like, wow, that was a big spike. Sell it back. And then it goes up $1 the next day. And you're like, oh no, they're cheaper again. So I guess I'll buy it back. And then it goes down a little bit more. And then you sell it back. And you're just selling all the spikes. Because remember, the contract isn't just changing based off how much the stock moves, but also the expectation. So when the stock has a big move in one day, and actually, if people watch this podcast, I live streamed today, and it was just a perfect example of this. But when stocks make these big parabolic moves, the market starts to gets a little carried away, and it'll start to anticipate more and more. Like, let's already move this much, who knows how much it can move, and then the prices of the contracts get bid up and up and up. And it's like, well, that's usually when I want to take my profits and say, okay, I'm starting to price it quite a bit. We've already moved quite a bit. I want to unload this and take the profits. So, and maybe I leave some profits on the table, but I'm always fine because most people don't make money. I'm not going to sit here and be like, oh, I could have made more.
Right.
Because you're always going to be playing that game with yourself if you do that.
Yes. That was the whole thing with the AMC. I know a lot of people are like, oh, I'm going to make more. I was like, I've already made like 3 times my money. I'm going to go ahead and dip out. Like, you guys can get stuck holding the bag if you want to.
And when with games like that, man, it really you gotta realize that it's a game of who's dumbest guy at the poker table. Because that's what that is. Because most people have to lose for some people to make money on pumping up like that. And some people had a different conviction. They thought it was going to come back completely. There's people have very strong opinions about that. So
I just didn't. I feel like there was some market manipulation happening, and I feel like after it did what it did, I was like, I don't see how there's a way that they're ever going to let it get back to that point. Yeah. So I was like, I'm going to go ahead and take my money because it's like, this ain't happening again. Especially with all the whole Robinhood ordeal that went down and like all that stuff. I was like, yeah, they're not trying to pay out like that.
Right. The only thing I would caution is that there's so many people who say, oh, the market's just rigged. And it's not playable because of that. No one ever beats the market because it's all rigged. And, there are situations and things that happen, but typically people get punished for that.
Right.
Citadel did get sued. They just had to fire one of their top traders actually just a few days ago because he finally got hit with the securities fraud. So, for the most part, most participants in the market are honest people, and those who aren't, they get whacked. Mm-hmm. There is a certain extent to which it's rigged, but usually when people are saying comments like it's all just they set it up for you to lose, especially new traders will fall into this. Usually you feel that way simply from a lack of understanding the greater complexities of how it operates. So, and also because your emotions betray you. Mm-hmm. So if you're new and you're like, I feel like this is the time to buy, it's probably the opposite, unless you're just some sort of new prodigal trader. And there's some people like that. Some people pick it up way faster than others, So, but for the most part, your emotions are definitely going to betray you.
Oh yeah, I've noticed it with betting, especially when it comes to fighting. I have favorite fighters. There's people that I like, and I'll be watching, and I'm like, I should bet on this guy, but I like this guy, and then I'll go with the guy I like, and I'm like, okay, well, I knew I should have just went with my head and betted on this guy over here because it's just the odds. It's just, of watching past performances or whatever, but for whatever stupid reason, it's like you kind of, I don't know. I guess I always have like that underdog. I love an underdog, So it's like you want to see him win. Yeah. And then when you throw some money on the line, you're like, okay, it's even better, And sometimes it pays off. Not very often, but sometimes it does. Right. And
so the way, perfect example, the way you would handle that in a trade, or the way you should even think about it when you are gambling, is you have to think in bets. So I don't ever think win, lose. It's always win. It's just which probability what. Okay, I'll have an idea, like my Tesla idea. It is for that idea in particular, I think it's the highest probability of any idea I've had in a long time. So I'm going to put more into it than I have in a long time because my risk to reward is very abnormal in my opinion. So for most bets, if it's 50-50, okay, well, it's a coin flip. That sucks. Mm-hmm. What am I willing to bet on a coin flip? Maybe there's, if the Fed cut rates today, there is at least maybe a 3% chance the market was going to crash. I think it was actually something like 5, but there's 5% chance the market was just going to straight up crash. Okay, well, for a 5% of a crash that could give you 1,000% return, it's probably worth it to have a little bit of money.
Right.
Maybe $20, maybe even $500 account, but like maybe just like $10 in it and something like that, you know? Like, well, if it does crash, it'll hit big, you know? And if it doesn't, it's okay. It just went for the other probabilities. It went for the other side. And I made the bet with the information I had, you know? So like people tend to think like they'll, especially when they're new, they'll think in like, was that a win? Was that a loss? Or that was dumb. And instead of relating your success to the outcome, you have to relate your success to the decision-making process. Did I go through the correct decision-making process? Did I have the probabilities correct? Did I? If I did, and it just wasn't in my favor, I did the right thing. Like, that's what matters. So, and then you start to make better decisions. It's thinking in bets. There's a book called Thinking in Bets, written by a world champion poker player. And she actually went around teaching some hedge fund managers how to think like she does to decision-making process. It's great. One of the best books I ever read. I read that book, and I was like, oh, this is articulating everything that I've taught myself to do. And I probably could have saved like, I don't know, 8 months of like trial, and probably even longer than that, of trial and error if I just read this book like 3 times in a row. Yeah, and just make sure everything was in grade. But like, it's so useful that you go through that process and you think in that way, because then you avoid so many mistakes. Because this isn't about just being right. You have to be right for the right reasons so that you can repeat them. Because you're not going to get rich off one trade.
Right.
All the guys who think they're going to get to this and they're going to get rich overnight. You're going to get rich over 100 trades. Mm-hmm. And so it's how things play out at the end of 100 trades, not how they play out on the next trade. So that's what you have to think about, you know.
Long game.
The long game.
I mean, that makes sense, especially, yeah, you're kind of formulating a plan, that
Right.
repeatable process, instead of just, impulse, that impulse of, oh, this looks good, I'm going to do it.
Right.
And like you said, did I do everything I was supposed to do and it just didn't work out?
Right.
Okay, that's fine. You win some, you lose some. That's just the way it works. As long as it is a game of chance sometimes. So,
Right.
The other thing I want to talk about, I see it sometimes. You talk about crypto.
Right. Love it.
You love it.
Yeah.
I do not understand it. I don't, what's going on? Do you do strictly Bitcoin, or are you like, I feel like the cryptos are kind of how you're talking about the mutual funds. There's thousands of them,
Yeah.
and there's only a handful that are worth anything.
The difference between mutual funds and crypto is there's probably even less crypto left. It's worth it.
Yeah.
So, remember I said there's a few dozen of thousands of mutual funds that are worth it. It's probably an even smaller ratio in the crypto universe. But I think it's undeniably the future.
Like we're going to go to Bitcoin or some sort of
Yeah. So
digital currency.
there's a lot of people who are afraid of like central bank digital currencies, you know, the government CBDCs, right? So, and they think that crypto is the step towards that, and it scares them. But I'm not scared of that because I think we're already there. There's just, we don't call cash a CBDC.
Right.
And most cash is already digital.
Right.
You know, and people will say, well, once we have CBDCs, they could just take your money away from you. Well, we saw Canada lock people out of their bank accounts and out of their PayPals and out of their cash apps, pretty much all at once. So that was an example of when it's happened to an individual without CBDCs. And then we saw them do it to a whole freaking country when they shut down Russia for the SWIFT payment system. So it's like, they could already do it without the CBDC,
Right.
You know? You could argue, well, now I'm making it easier, but that's probably also debatable because it wasn't very hard for them to do it, you know? Russia had to reorganize how they orchestrated their entire economy, you know? So that's no small feat that they had to do to overcome that. And it took them like a full year to kind of recover. So it's a big deal. So what you actually get from CBDCs is transparency in the way the government spends money, if it's done correctly. You get less fees when you transact money. have these settlement periods, especially for new traders who are new in the market. Used to drive me nuts. I could only make so many trades in a day because my funds didn't get instantly settled unless I had a margin account. Then I was a limited amount of trades I could take in a day, and then it was so annoying. Like they're literally slowing my pace of growth for no freaking reason because it's to protect me. I remember getting so irritated about that. But with the digital currency, you don't have to worry about that. It solves a lot of things. In African countries, when these are incorporated, it overnight solves a bunch of corruption. Police officers think they get raises, but really all that's happening is no one's scraping money off of their paycheck as it gets passed out to the government. So there's a lot of positives that I really like that make me really, I'm also an optimistic guy.
See, I've never heard that perspective of the transparency aspect of it.
Right. Everyone thinks when they think of crypto, they think of privacy, but the privacy is built on top of crypto. Crypto inherently, all Bitcoin is a ledger. All Bitcoin is just this a bunch of statements of what transaction was made. So it's actually just the best record keeping device ever. It's actually the opposite of privacy.
Okay.
So that happens in the blockchain. It's there forever and everyone can see it.
Okay.
Yeah. So it's the privacy that's built on top of it that you can utilize. So, if someone has your wallet address, that gets a hold of that, they know everything that you buy all the time, which is what people kind of worry is that the government will track what you spend money on and social scores. And I just don't think any of that's going to happen, honestly.
I mean, if we could track the government, that'd be great.
Right.
That's kind of worth it.
Right.
Because a lot of the problems stem from corruption.
Right.
All over the world.
Yeah.
So.
Right. No, we'll get too political, but I think I'll say one political thing. I think both parties should be able to agree on the fact that the government spending is pretty you don't even know where it goes. If we could just know where it goes, then we could probably actually start to have some reforms. And maybe people would feel better about paying taxes so they could actually see where the money went.
Right.
That would probably overnight solve massive issues in this country. So, it's pretty big, but everyone's fear-mongering about it.
It's probably for a reason. It's probably like you're saying, okay, it brings transparency, so who's to say that the government isn't even propagandizing this thing?
Fear.
Fear.
Oh yeah.
So that they don't get caught with their pants down.
I mean, honestly, I never thought about it like that, but that makes sense because I've done stuff like that in the past.
I mean, I've literally never heard anybody bring up, that would be incredible.
Yeah.
Literally, that would be incredible. I was saying we should have kind of how you have your thermostat in your house. Every home should come with a little tablet or computer that's built into their wall. And anytime any legislature, you could do a state or federal, depending on where you are, it would pop up in layman's terms on your little tablet, and you could vote or do whatever you wanted right there from the screen.
Yeah.
So even from a tax perspective, if it's all digital, we could get a breakdown and say, okay, whatever income is for your government, this is what's left over, we can spend it in these places. People could just in real time, like you said, where's my tax money going? I don't have a problem paying taxes as long as I know it's being utilized and not just stolen by somebody giving a contract to, their cousin.
Friend, who's charging 20% more for no reason.
Yeah, where I lived, dude, it was a huge thing in Troy. Whenever cannabis became legal, they actually got busted. The clerks or whoever was issuing the permits for the grow ops and the sales things, they were giving them. They were taking all the application fees and taking the money, and then they were dishing all the things out to their buddies. Yeah, and they got busted. But it's how often does that happen where it doesn't get caught?
Yeah, well, especially when they don't get paid, they just get stock advice from the guy who runs the company.
Yeah.
These are all smashing the market.
Yeah.
And to be fair, I kind of question whether I don't know if everyone in the government is actually insider trading or if I'm just an optimist who gives the benefit of the doubt, right? When people would consume conspiracy, I usually assume stupidity because it's simpler. But I don't know if they're actually insider trading like everyone thinks. I wonder if the job inherently means you have to have such a close pulse of pretty much everything going on.
Yeah. And they take advantage of the loopholes, basically.
Yeah, basically. So, would you call that insider trading? I think the part where it scares me is when it comes to voting. And when I see Congress members buying up defense stocks and making a killing off the companies making missiles, and then turn around and vote and say, "Oh yeah, we should definitely keep sending stuff to Ukraine." I'm like, is that to help Ukraine? Or is that to help your wallet? It makes me wonder. I would rather just not have that variable and just force them to only buy indexes.
Yeah.
But you can't lock them out of the market completely.
Right.
Because the people who say that are out of their minds, because that's when they go from when you prevent these people's ability to make tons of money, then they're more easily bought out. At least with this system, they can make a killing on their own and be less likely to be bought out, Because everyone's like, oh, everyone just buys out the senators. I'm like, you realize most senators are stupid rich, right? Nancy Pelosi's worth 20, 40 million.
I mean, that was her argument when they brought up the trade, and she was like, well, it's a free market.
Right.
We're just doing what everyone else does.
Right.
So you can't lock them out of the market.
Right. So, but you should just limit them to like the indexes. Mm-hmm. Right. So.
I mean, yeah. Throw some term limits on it. Limit it to, okay, you want to play in the stock market, you can do that after your 4-year term's up or your 6-year term or whatever. You know? I mean, I guess that's a way around it.
The indexes, just like buy the index that holds the top 500 companies. Mm-hmm. You can do that.
Yeah.
But you can't buy an individual stock.
Yeah. You have access to change with legislature.
Right.
Yeah.
That's when it gets sketchy. I don't like them voting on things that they can benefit from. Yeah. That needs to be fixed.
My buddy, that's why I asked about crypto, because my buddy's like, he's messaged me like twice randomly talking about like crypto. I guess he's probably been on YouTube watching like YouTube videos about cryptocurrency. So he's brought it up twice now. And I mentioned your Discord. I'm like, dude, $20 a month. This guy does crypto. He's got videos on it and stuff like that. You can get into it. But I don't.
Well, I would caution about the crypto because I don't do a lot of. I like crypto, but I don't trade a lot of crypto.
Okay.
Yeah, so I'm not going to be.
Okay.
If you want someone taking out small crypto coin, I see it as a completely different skill set than what I've specialized in.
Yeah.
I might have it to a certain extent. Like I've made some good moves in crypto, but there are some members. We do have like several guys who are in crypto, like making money in crypto. Yeah. They're buying like all these weird coins. They're good. But they're also just other members, so like some of these people they seem good, but people typically only share their ones,
right?
So you don't really know,
right?
Whereas like every move I make is not only shared but documented for the past several years. But so there are some guys doing it, and there is some stuff in the Discord, and I do kind of like, if someone asks me to do a chart on something, I'll do that. But typically the way, if you want to get into crypto, you'd want to get into crypto if you're really good at like thrifting. If you're like one of those guys like, I like trading cards, or I like action figures or something. Someone who's really into culture, and like what's hot and what's not and what's interesting. Someone who's really good. Like if you're a social media influencer maybe who's like way more successful than me, and you're really good at catching those trends and sticking up with that, that's someone who'd probably be good at crypto trading. Because that's all it is. It's just what's hot, what's not. Nothing really matters. Nothing has real fundamentals. Nothing's built a product that actually works. No one's going around with paying crypto for stuff off their phones. Mm-hmm. Like when that happens, that's when it's here. It's here. Right now everything is just living in the theoretical. Except for Bitcoin.
Well, that's my thing with like Bitcoin. It's like, is it only going to become a viable? Because right now my problem with it is like, okay, I can pay you with Bitcoin, but who's to say that, okay, my rent's $900, I give you $900 worth of Bitcoin. Okay, well, tomorrow that $900 may be worth $700,
right? Or
it may be worth $1,100, or it just fluctuates so much that it's like I don't see it as a stable alternative to the dollar.
Well, that's why there's other products built. Well, okay. The one thing that is deceptive of is that the dollar is always changing. So, and, you know, the price of money seems stagnant because we have the printed bills. But really, what they represent is changing in every moment.
Inflation.
And you can see it on the stock market. You know, you can track what the currency is worth. Of course, it's always in comparison to another currency. So they're always traded in pairs. That's what the Forex market is. So everything's traded in comparative to what it's worth to something else when you're talking about currencies. So it's exchange rates that you're trading rather than like an asset. So when you're talking about, you know, the dollar isn't changed, it's like, well, actually, what most people don't realize is they're losing about 15% of the value of their dollar year over year. So, you know, when you to go off on a side tangent, when people are talking about like, oh, the market's going to explode and there's too much debt and the currency's going to be worth nothing, it's like, well, actually the currency's worth like 20% of what it was several years ago.
Right.
You've already had it explode.
Yeah.
You just don't realize it. Like everything,
We can see it.
it's
The cost of shit is.
everything. It's happened to everything, bro. So like, the whole system is kind of arbitrary, and that's why Bitcoin is interesting to people. That's why some people are obsessed with gold, but I'm obsessed in like a company that produces things, that does stuff, that has a purpose, that you know, benefits society. Like I'd rather own that over a piece of gold.
Yeah.
You know, always people say, well, who wants stocks if the world falls apart? Who wants your gold? They want weapons and ammo and food.
Somebody told that to me the other day. Like my dad was talking about buying, you know, he was trying to get into investing, and he's young, he's a young kid, and he was talking to, I guess, his dad or his stepdad or something, and he was talking about buying gold and asking what I thought of it, and I said the exact same thing. I was like, what is gold gonna do for you?
Yeah.
Like, there's no real value to gold.
Right.
Can you start a fire with it? Can you eat it? Can you like? You can't do anything with gold. In my opinion, I don't think it's a good investment. I was like, dude, I told him to stick to the index fund, you know, something like that, where you can, if you want to play that game, the slow game, just throw money into the market and let it sit there. Like
The other thing to think about is like different things are for different periods of life. So, you know, like a lot of these older guys are the big gold guys. You know, he said his dad said that to him. His dad's in a different phase of life than he is. He's in a phase of life to take huge risk, and his dad's trying to protect his purchasing power. He's trying to protect the capital and the wealth that he's built. So he's going to want something like gold, because he's not looking to generate a bunch of wealth or take any sort of risk, and gold seems like it's not very risky. Gold is risky. But a lot of people, you know, for someone like him, he was in the same time frame. For us, if we operated the way he did, and this is where a lot of people screw up, and they're in my comments all over the socials by the thousands, is they'll take what that 80-year-old says and they'll apply it to themselves. It's like, well, he only has to think about what's going to happen in the next 10 years. You have to think what's going to happen in the next 50. And gold's only, you know, finite on Earth. It's pretty much infinite once you have reusable rocket fuel, and you can go to different planets. You can start mining asteroids that are constantly whizzing around through the galaxy. It's like we don't have to travel very far to just go collect some from the asteroid belt, or from, you know, I mean, that would be pretty far, but just from asteroids and that, you know, just right outside our orbit that are just whizzing by, you know. So you create a methodology of mining those, then gold's infinite.
Gold's gonna come.
Then the price collapses as soon as people, and you'll think, oh, it'll collapse slowly as we mine more and more. No, it'll collapse instantly the moment they realize it's doable. The moment it's proved, this is where lots of people screw up, like it'll happen slowly. No, it will happen slowly, but then all at once. The instant the market realizes it can be done, everyone dumps their gold, and the price crashes.
It's like back to that thing you were talking about earlier with the market shortage or too much. It's instantly going to realize, we can't do much with this anymore. Let's go ahead and crash it, boys.
And so, and you know, just as a, you know, one of the things, if you're new, write it down and post it or something, but people always overestimate what can be done in the short term, and they always underestimate what can be done in the long term. So, you know, so might be someone listening to this and they're like, what he just said there is ridiculous. It's like, think about how much AI changed in the past 2 years. and then ask if it's ridiculous.
It's insane.
Yeah.
People don't like people that aren't paying attention to that space. They are underestimating drastically
Right.
what's going to happen within the next like 5 years. I try to talk to people and it's like I'm speaking a whole nother language and I'm just like, no, you truly do not understand. Like there's crazy stuff happening very fast with AI. Like,
and you know, that's when it's the most important to learn about the stock market. It really is. Like, it's not just something that would be cool to know, cool for some people to know. It's like essential more than ever, because there's so many people whose jobs are going to be wiped out by this stuff, and this is like the last chance they get to make a ton of money off of it. This is a hedge against what's probably going to take your jobs, you know. And some of these people have the money to, you know, to work around that, to get to help them through a transition period to finding a new thing that AI doesn't do.
right.
And this is your opportunity to do that, because a lot of these companies are listed, you know. And if you're very wealthy, go talk to a financial advisor and how that works with the private markets and have them help you with that, you know, get accredited. If you don't have enough money to do that, but you're interested in private markets, you can also just pass the securities exam on your own, and then you'll be accredited that way as well. So, you know, there's different methods to get into those private markets to be an early investor of some of these companies too. And I 100% recommend doing that.
Yeah, I've been trying to tell people.
I'm not a financial advisor.
I've been trying to tell people, like, I really do believe, like, in the next 5, I don't even know if we have 10 years. In between that time period, like, you need to make as much money as you can right now.
Right.
Because, like, things are going whichever way. You know, you were talking about the credit score thing.
Right.
And sometimes I'm more conspiratorial minded, but I think that there really is going to be a more move towards a socialist structure, because again, AI is coming in. People are going to employ the robots that Tesla's talking about, you know, so they're going to get rid of the workers. You losing your job, you're losing income. That's taking money out of the market. The only person making money is the owner of the companies. Well, something's got to happen.
Right.
Like, they're going to have to either revert to some like socialist, you know, you're going to have a tier, and I'm telling you, you don't want to be locked in the bottom tier.
Right.
Like,
right.
So make as much as you can right now, set yourself up, so at least you're, you know, somewhere in that middle ground, and you can, you know, reap the rewards of.
To get it right, you could be on the upper end, you know, because a lot of these things are real cheap.
Mm-hmm.
You know, if Tesla does take over everything and makes the robots for everything, and the market is pricing them as just like an EV company that's not doing very well.
Right.
I think anyone can understand what the odds are for that. You know, well, what kind of probabilities we're playing with there, or what rather could the risk-reward ratio be? You know, it's massive. So if Elon does it, completes that task, it's huge. The only thing I would say is, I don't think he meant it in this way, but he did say that the money's taken out of these things, people didn't understand that money just shifts hands.
Right.
Right. So,
no, yeah.
So
So whoever owns all the robots is going to be making all the money, because there's no more employees, they're just robots.
Right.
So then the employees don't have any money to spend in the market.
Yeah.
So it's like, what's going to happen here? Like, we're going to have some crazy.
Right.
I don't even understand how.
Deflation.
Yeah, we're going to have. Yeah, it's going to be.
Right. So it's going to everything. Prices are going to come down because no one can work, but no one's spending money, so the economy starts to slow down.
Mm-hmm.
And then it's horrific. So the only thing I would say is that is the fear we
have a long time, I think, before that comes. But
yeah,
I think it's coming.
And it's also the same fear. I think it's different this time in some ways, and then sometimes I wonder if I'm just young, you know. And so I kind of have to. I'm in a constant state of like playing devil's advocate with myself, because the other side of that coin would be that, like, they said the same thing when cars came out, they said the same thing when the internet came out, they said the same thing, it's going to wipe out so many jobs, but every single time it just creates new jobs.
Mm-hmm.
So people are telling me like, oh, prompt engineer is a new job, and I'm like, well,
for now,
is that a job? I guess I was like, is the job just like be good at asking questions?
Yeah.
Because I think, you know, like, I don't know, it's just, I just wonder if I think everyone's just gonna do that. So we'll see.
Lex Friedman had a podcast. He was talking. I can't remember what the guy's name was, but is it a engine called Proximity or something like that? They're basically creating a system where it's like Google, but you ask it questions instead of searching for websites.
Right.
And he was talking about prompt engineers and how he's developing this thing to basically, like you were saying, open door here with a sign. Okay, well, he wants it to be as foolproof as possible. Like, you could just type in the dumbest, you don't have to be a prompt engineer, and it will give you what you're looking for. So, like, that's what they're engineering towards. So, like you're saying, is it really a job? For now it is, but, like, who's to say in 2 years you don't need prompt engineers anymore because the AI is just so advanced that you can give it some vague,
It'll start to be able to, or it's been asked questions so many times that it knows what's coming next, and then starts to make assumptions.
Yeah.
Right. Or you've always used so closely you can anticipate what you're going to do next.
Yes.
Yeah, this starts to get really freaky.
I would hope, like, there is that, like you said, you want to be optimistic, and I want to be optimistic too, especially because, like, all the technology, we're creating all this technology, and it can take away jobs, but, like, we should be using that for the benefit. Like, yeah, we want it to take monotonous, stupid jobs that we, menial jobs that we don't need. But then it's like, there's always that thing of the corruption where they're going to basically let greed supersede utilizing technology to uplift everyone.
Right.
Which I would hope that that's what we would do with, like, 3D printing, and, like, we would get to the point where we don't need, like, everything is available through technology.
Right. Well, I mean,
that's what I hope happens.
Right. Well, that's what we need too, because, like, the population in the U.S. is starting to drop off. It's way worse in countries like Japan and China, where they're at. Their issues are existential. Where if they don't solve this, they're going to have serious problems. So, like, so people are more important than money. So if your population is dropping off, your productivity is dropping off, there's less money being made in the economy, there's less money to go around, which means growth slows. So, like, if you're going to have more people, it doesn't matter how, unless if you have fewer people, your productivity needs to be exponentially better. So each person needs to be that much more productive. The reason this is such a huge deal that we're also starting to have a population collapse here in the U.S. is because we have things like Medicare, Social Security, where the older generation that's retiring that relies on the taxes that the younger generation pays, if they are larger and they get more expensive as medical expenses go up, as their cost of living goes up, and they need more and more money, and then we are losing our jobs to AI. The hope would be that AI is actually creating that more productivity and putting more money into the system and doing more jobs, and people are becoming that much more productive. Because right now, the things are now without AI, we're screwed. And there's a massive financial catastrophic collapse coming because it's too much. The boomers are too big, and the younger generations are too small. They can't afford it. They just can't. So, like, we already know that, and so, like, the big bet right now is that, like, innovation will solve this. So without that, I mean, we're all globally walking into, making 08 look like a joke.
Right.
Right. So, like, that's something else people should be aware of.
So buy stocks.
Yeah. So buy stocks. Yeah.
Yeah. No, see, and sometimes I need to do stuff like this because, like I said, when I message you, I ended up getting in the Discord, actually paying for it, getting on. Okay, we've done this podcast. Now I'm going to go home. I'm going to start a Webull account.
Right.
And I'm going to get the platform. I'm going to put some money in it,
Right.
Start doing it. So it's like, I guess just do it, man. Like,
Right.
don't overanalyze, because, like, there's a million different ways.
Right.
Just start out the simple way. If you like it, if it's working, then try to figure out a strategy that you like, or that works with how.
Yeah. Well, I mean, the best way to get into it, right, if you said you want to run on webinars, but buy a stock and then track why it moves the way it does.
Okay.
What's happened with this stock? I've owned it for a month. It's going to does anything happen? People just like it more? Maybe nothing's happened, so that happens. Sometimes rumors start shifting and you don't get the information, but the stock's up 20%, and you have to go, okay, what's going on here? And then you hear about it. Then there's a news headline. But then when the news comes out, everyone's like, oh, the rumor's true, and then they take their profits. So buy the rumor, sell the news is what that's called. But but those little slogan-y things and stuff like that, that's what you pick up with experience.
Yeah, I've heard that before.
Yeah, so you always you'll start to pick up stuff like that. That's when just by time in the game, then when you go and you watch that guy with a few hundred followers who's talking over your head, then when you listen to him, you're like, oh, now I'm starting to pick up some stuff what this guy's talking about, and then for a lot of those guys, you find out this stuff too. There's what a lot of people don't realize, and what I argue with a lot of people, investment bankers sometimes will argue with me. Economists, I definitely have beef with a lot of the time, because a lot of these people prefer to sound smart over making money. And I'm like, well, it shouldn't be worth that, because fundamentally, and I'm like, if it goes up $20 and I sell before it crashes, I make money. I know what it's going to do, but I'm watching this all day long. I can be nimble. That's how I win. I'm not going to win because I have more from. Just be honest. I don't win because I know more than a hedge fund. I win because I'm more nimble than a hedge fund, because they can't buy and sell and be really quick and in and out and stuff like that. I can pay attention to every fine detail, and there will be times where something like Tesla happens and they're just way off sides because. Well, oftentimes because Elon said some political things that a lot of people disliked, and so they sold the stock, and it created an opportunity. So, all you have to do, 80% of what we do in the markets is we are just patient. We just wait for the opportunities. I'm not out here like, oh, I gotta find the next trade. I gotta find it. I'm more of sitting back like, what's gonna happen today?
Is that a dangerous mindset to have? I gotta find the trade.
Oh, horrible. It's like it's the gateway to developing actual gambling habits, and it's because you're not you're not thinking in bets when you're doing that. You're not waiting for the probabilities to be in your favor. Like, the reason I can consistently beat the market is because I have an edge. Why do I have an edge? Well, I have 1,000 data points that say when these things happen, I'm more likely to win. And so that's what my experience is built off of. That's my edge. It's a well-defined parameters that I follow that I use to take my trades. So when someone tells me I was just gambling, it's like, well, I have a house edge though, built off this data that I can review and prove. Like, when these things happen, I win. When I start to lose, and when my win rate starting to fall, and I maybe go into a spiral, everyone goes through some losing streaks, I'll look back and be like, man, I wasn't following my rules. Because I was just getting excited and just taking a bunch of trades, because I'm human and that happens sometimes, So it's very hard to be 100% disciplined at all times. Almost no one can do it, ever.
Dude, it's just so funny how the discipline, like you're saying, it rolls over into anything that is chance related. Because I don't know if you play League of Legends. I play TFT.
Okay.
Teamfight Tactics.
Yeah.
I just hit in Hyper Rule. I hit the highest tier.
Okay.
That I can get in there. And I noticed I would get bored of playing the game. So when I got bored, I would just start doing random shit.
Yes.
And then I would lose.
Yeah.
But whenever I stuck to the same strategy, I would at least top 4. Like, if you just stick to the strategy every single time, it's boring. It's boring, but there's results. You see results. Like, it took me a little while, but it's like, just staying consistent and not going outside of the parameters. Like, I want to do this over here because it's fun, it's exciting, it's new. But then you're like, I know what's going to happen if I try to do that. It's feeding me this here, and that's like a huge thing too. Like, just paying attention to like what it's giving. The old like Yu-Gi-Oh! Heart of the Cards. Like, sometimes the game just tells you what to play as long as you're paying attention and watching it. You can do it. But it's so funny. Like, you're sitting here saying this stuff about discipline and like sticking to the path, and it's literally so true. It's like the book, The Compound Effect. Like, I tell people to read that book because it's like you're saying, little bit. You got two guys. One guy is doing one extra thing every day on the line. He's going to be going up, and the other dude who's not doing anything is just straight. And eventually, yeah, he's only been doing a little bit, but he's going to be way up here, and the other guy's going to be down there.
Right.
With that being said, I know you said what was the bet book called?
Thinking in Bets.
Thinking in Bets. So
Yeah.
is there, for people who like to read, is there like a trading book or books that you would like recommend?
So I do a lot of live shows on X, and I usually get lots of pushback when I say this, but I really just think a lot of trading books are pretty useless.
Yeah.
Unless you're reading something like
Maybe just the mindset thing.
Books on psychology can be really helpful, but that's what more of what Thinking in Bets is about the psychology.
Right.
There's some actually like solid steps towards thinking better than there. But the full title of the book, by the way, if anyone's trying to look it up, is Thinking in Bets: How to Make Better Decisions When You Don't Have All the Facts. But there's the Ben Graham wrote the. And for some reason I can't think of the name of this book, but it's a classic. The Smart Investor that's really popular. I think it's called The Smart Investor, but that's probably one of the most popular books. And that's like some solid basics of investing. But most of the time, what you're going to learn best from is by finding like a hedge fund manager who's had a ton of success and learn from their strategies. Because because the thing is that it changes. Like the world of investing doesn't change much. Something's cheap, buy it. Something's cheap, they have a moat, it's hard for other people to compete with them, buy it. And the parameters for which we measure what is cheap don't really change much. You can even just look at a 10-year chart of it and be like, oh, it hasn't been down here in a while. Has anything terrible happened? Is it going to go out of business? No? Okay, I guess I'll buy it. Really simple. But trading changes. So like anyone who's written a book, it's like, that might not work anymore.
Right.
Because I have the Darwin philosophy with this stuff, where it's not the strongest, not the smartest, but the most nimble that win. I know a lot of smart guys, that they just never seem to get their psychology right, and they suck at trading, In fact, the best hedge fund managers typically don't come from the technical side, they come from the marketing side. It's usually the guy in communications who doesn't understand the actual technology to the level that the engineer does, that actually usually does the best when it comes to trading with it. Because the actual data scientist for the AI might just be like, oh, it's just a dumb code that I wrote, and it has so many faults. But the guy in the marketing team is like, oh, you can do this and this and this and this and this with it. Oh, and if we do this, this and this and this, the creative guy is like, oh, there's actually a ton of things we could do with this and a ton of uses. He might see the side that you don't, So it's just funny. It's actually from a research study. Showing people with the technical backgrounds often don't make great hedge fund managers. So for financial institutions that are looking to hire hedge fund managers actually use that. They actually typically don't hire people from technical backgrounds. And something that I wanted to be aware of because I have more of a technical background. But the market environment also changes. So you're going to have periods of time where, like right now, most people are just passively invested, and they're just like a zombie buying, and things aren't accurately priced. Like we're kind of zombie walking our way into like probably a golden age of trading, because most people are just like, you can't beat the markets, no one beats the markets, and then they just start buying indexes, and you just type in TikTok, no one beats the market. Video it.
Yeah, that's all I hear.
That's everyone just parrots it.
Mm-hmm.
So,
it's
a great example. It's a great example of how you can also when you can win in the market is when everyone's just parroting the same thing.
Right.
When you can actually win at trading is when everyone's parroting the same thing, because they just buy and passively buy, and then all these things, you just look at them and you're like, why is that worth so much? Why is AMD, who's clearly not better than NVIDIA, trade at 3 times the valuation? because everyone's just passing by. They're like, I like AMD, and it used to look cheaper than NVIDIA when before the stock split, but they don't actually pay attention. They don't actually learn in these things because they're just passively investing.
Yeah,
like
yeah,
AI
right.
and stuff, buy it. You know, yeah, AMD's P/E ratio, even after the sell-off today, is like 180 or something.
That's
the
crazy.
Nvidia's is like 64.
Yeah, I was gonna say, all I hear is literally NVIDIA all the time.
Right.
Especially even when you're talking in the AI space, I hear about people talking about GPUs, it's always NVIDIA.
Right. Yeah. Because
How the hell is AMD? Yeah, why is AMD 3 times the price?
well, it's not the price necessarily, but it's the price of the company versus how much they make in revenue. That's more expensive. That makes it more expensive.
Okay.
Yeah. So it's actually not a higher market cap. It's the relative price to how much they actually generate in capital.
Okay.
Because there's a few different reasons why companies can end up like that. Because the market have expectations of them having still growth. There's a company called Kava, or the stock ticker is called Kava, CAVA, and it's probably the most expensive restaurant company out there. Not because it's the highest market cap, like the market has given them the most money, but proportional to the amount of revenue they generate, it's by far the most expensive. Why? Because the company has insane metrics. Like the same-store sales are amazing, the reviews are amazing. They're like double the amount of locations they have, and at the same time, they're also able to charge more for the food. So like they're expanding locations and expanding revenue at the same time. Super hard to do within the restaurant industry. They're like the early Chipotle. It's like buying Chipotle before everyone was like, oh, I know what Chipotle is. Like that's what that company is. And when you look at the stock price, you're like, it's priced like that too. Like you're paying a premium. You're paying a premium amount for a premium stock right now. And so, buying something like that, it's like, you're making a bet that that's going to continue, because if it doesn't, it's going to get cut.
Right.
Because it's, but it's just sometimes you just have to swallow the bullet to get in on the hype. And what is high can always go higher. What is low can always go lower. So, you just got to ride the wave. So, also understand the market environment. So like interest rates are really low when it's really cheap. Everyone has a lot of money, like in COVID, where they're literally sending people checks. Everything's really expensive because everyone had money to get in the market. And you have to take a step back and be like, do you trade this type of market the same way you would have traded in 2022 when everyone ran out of money and everything started crashing? And whoever in the conversation on the economic level is constantly like, how bad is inflation going to get? Are we in a recession? That's what everyone's talking about the whole time. So the market stayed suppressed the whole time. In times like that, different stocks will have different ways to perform. The way you interact with these different stocks is going to change. The way you trade that market environment is going to change. So, and then over, multi-decade periods, the market environment will also change. So what's going to happen is there'll be this parabolic, there'll be this huge paradigm shift where people will go from mostly passive investing to mostly active investing, because soon active investors will start outperforming passive investors. And people will, naturally, the money will chase that, and then it will go back the other way. And most active investors become passive investors again. But it will take like several decades, maybe like half a lifetime, for that phase to fully go through. So it's also recognizing stuff like that. And so you could read a book for what worked for a guy who maybe lived 100 years ago or 50 years ago, and then you go to the market right now, and there's probably some age and timeless wisdoms in that.
Yeah.
But probably the most timeless thing is just going to be your own experience, because you're probably not going to have the trading style of someone else.
Yeah.
So there's so many different traders that have so many different techniques. There's so many different ways to do things. Like unless we're talking about penny stock traders, I don't think there's any two traders that trade the same way. These penny stock guys all just do the same stuff. Yeah, that's pretty much it. Futures traders can kind of have some similarities as well. You hear guys saying stuff like, well, look for the golden pocket, or I'm using my Fibonacci. Some of those are like really repetitive, but generally everyone's going to have something like, oh, this works for me all the time, so it's just like all I do, one trick pony. That's typically what you see.
So the best thing to do probably is
Specialize.
specialize.
You get the experience.
Look into get the experience, feet on the ground doing it. But like psychology, maybe, the technical is probably not good to look at just because it's changing so often. So really you need to hone the mindset of trading. So probably that one book you're talking about is probably one of the better ways, or just understanding yourself. Man, I preach to people all the time. Psychology is like one of the best things you can, if you're going to use like free time to study something, psychology can help you in just so many ways. Because the more you understand about yourself, the more in control of yourself you are, and aware of how you operate and how you do things. And like you said, as long as you got your system and you operate within that system, you're going to win more than you lose.
Right.
It's just facts.
Right. And there's so many things to learn that I might have come at it wrong and should have started with the things that aren't worth learning. Like, don't bother to learn about what part of the business cycle we're in. Don't bother to learn about what does the CPI mean. Don't bother to learn about all this stuff that probably like a banker or a CPA or a CFA is probably putting their head through a wall hearing me say that. It's like, what is he talking about? Those are the fundamentals. You have to know that. Blah, blah, blah. But like stocks only trade off those fundamentals over multi-year time frames. And you're going to like show me a chart and I'll tell you the news. I don't even need to know what happened. I can tell you what happened just looking at the news. So like your experience, your learned experience from actually looking at the market and learning the psychology of the market, it's gonna be worth way more. And a lot of those guys will just say the squiggly lines, it's just all fantasy, it doesn't mean anything, it's the astrology of finance. But that's because they never actually took the time to give it a shot, because it works. Yeah. So because it's all people, there's algorithms that trade the market for the most part. It's mostly people making the end decision. Mm-hmm. It's also people who train the algorithms, so they fall the same pitfalls.
Everything trends.
Yeah. So everything has trends. It gets out of sight. It gets out of hand, and all that stuff always happens. So like if you avoid that stuff early on, and along the way you're going to pick it up because you're going to hear everyone talk about it. You're going to explore to like FinTwit, which is the financial side of X now, formerly known as Twitter. Okay. Yeah, so FinTwit's really good. So if people want to learn about FinTwit, just go to Nobel Trading on X and just look at all the people I follow and follow them. I only follow people in that space. So that if you do that, just that alone, you'll have pretty much every major headline on your feed when you want to see it, and pretty much every major new economic event. Because that's what I use to track all that stuff. I literally just use X. There's all kinds of automated tools and stuff that people have rebuilt for it.
Yeah, I've never used Twitter.
You're going to if you're going to get into this.
Sounds like I probably should.
It's extremely useful.
People say, everyone loves, and I've never really understood why. Because the one time I tried to use it was however long ago when it first came out, and it was oh, Joe's going to get pizza on Twitter,
Right.
And now it's this, everyone's this is where I get all my news from. It's just instantaneously just dropped to me, and boom, 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 I can see it.
Right, and not a lot of opinion pieces, so that's the best thing. Bloomberg, I love the Bloomberg terminal style, here's a headline, but a headline written like a data point, bomb exploded here. Not suspected that blah, 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 hit the bomb because of blah, blah, blah. It's it's just bomb exploded here. Doesn't tell you who did it, it's just that happens. Right. And it's okay, that's only that's the only information I really need.
Right.
I don't need you building your bias and making my research process. Yeah. I don't want to hear any of that. So I think with news, I don't want to hear the political spin on it. I just really burnt out on it at this point.
Yeah, me too.
It's constant barrage. Yeah.
I don't understand. It's again psychology thing, because there was a time in my life where I was, more this way or more that way, but now it's okay, all I want to know is the facts. I don't care about your spin on it or your spin on it. Just tell me real deal how it is, and that's all I want to know. There doesn't really need to be all this extra stuff on it.
Right.
Like you're saying, it's like clickbait, man.
The only real way, just as a trader, you're gonna hear the same thing. it won't be the politics, but it'll be the bulls say this and the bears say this, and you kind of have to always read both. If you actually want to dig into some story, you have to read what the bears think and what the bulls think. You got to read what the liberals think and what the conservatives think, and then what's the truth is probably in the middle.
Somewhere in the middle.
Yeah.
So what's, okay, I hear bear, bull. Is bull like we're going and bear is holding?
Oh, a bear is someone who thinks that something's going to go down. A bull is someone who thinks something's going to go up.
Okay.
The idea is that a bear would swipe down at something, and a bull would throw the toss it up with its horns. Yeah.
Oh, okay.
Yeah.
Yeah, I hear that all the time, and I'm like,
Yeah.
that's funny. I never knew where it came from.
Yeah.
All right, man. I think that's about it. I mean, unless there's anything else you want to.
Yeah, the only, can I give a free shout?
Yeah, go ahead.
So, NobelTrading.com is everything I do, and then the other thing is that I helped one of our inner circle members start a new YouTube channel. So it's called Noobs, and his username is Noob Trader. Kind of ironic because he's an excellent trader at this point, but when he admitted he wasn't. And he gave each of his three kids $10,000 and in their brokerage accounts, and he's teaching them how to trade.
Nice.
So he does like an hour or two in the morning with them every morning.
That's pretty sick.
For the past week, and then he uploads it as a YouTube video. So if you're wanting to learn his style, where like he's selling the bets, he's teaching a 10-year-old how to do it. So if a 10-year-old can do it, you can do it.
Okay, yeah. After we're done, anything you want me to put in the description, like the link to your YouTube, link to the Discord server, that guy's YouTube, whatever you want to plug, just send it to me, and then I'll drop it in the description on the video, so everybody can just click on it and go there.
Awesome.
Dope, man.
Cool.
It was fun.
That was great, man.
Appreciate it.
Yeah, appreciate you.